Hello, I'm Gavin Ferrar. I'm the CEO of Central Asia Metals PLC, a AIM-listed base metals producer with operations in Kazakhstan and North Macedonia. Nice to be here today, Matt.
Good to see you, Gavin. We saw you live in London at the end of, when was it? End of November, beginning of December. Obviously, since then you put out the full year results. Maybe let's start with that, and then we'll kind of get into the what's next and what's possible. Okay?
Yeah, look, we got out on the road for the past week, speaking to investors, presenting our results for 2024. Decent set of results, very pleased with them. $214 million of revenue, just under $102 million of EBITDA, so giving an EBITDA margin of 47%, which for a mining company is super respectable, we think. And ended the year with a really strong balance sheet of around $68 million in the bank, having generated just under $66 million of free cash flow through the year. What that allowed us to do is pay our final dividend of 9p, taking the full year dividend to 18p. So that represents about 63% of that free cash flow in dividend payments for the year. So hopefully the shareholders are pleased. Certainly share price performance in light of everything has been good post the results. So I think people are enjoying the returns while we look for the next big thing.
Well, yeah, I mean, let's talk about that 63% of free cash flow, because the allocation of capital allocation is really important. If you don't have any options around M&A, I can see why that makes a lot of sense. And I think you've been on the road. You're probably getting a lot of questions around the M&A. So I'm going to be rather boring and ask you the same question. You've looked at a lot of projects. You're just not getting anything over the line. So what is it that you're looking for, and what's stopping you?
Look, I mean, just get back to the dividend for a second. I think we've been very transparent about this ambition here, and have always published the stats of how many things we've looked at, of how many tires we've kicked, and so on. So we're pretty disappointed that we didn't transact last year. It wasn't through lack of trying, but in the meantime, what we sort of think is the right thing to do is reward the investors with that sort of outsized dividend, if you like. I mean, our policy is 30 to 50%, so paying 63% kind of compensates them for the fact that we haven't transacted and given them a growth option within the business, or a strong growth option. To answer your question, look, we went. It's been a very active program of ours for ages. I think we basically have been, since the end of the pandemic, really focused on M&A, come close on a few things. And last year was probably the closest we've got. We had 13 NDAs, 6 site visits, and we actually got to the point where we made a few offers on assets as well. And I think there's been a little bit of a view that we're potentially too cautious and we're not entrepreneurial enough, and maybe the board is looking for this unicorn that's not out there. But it is difficult, and as an ex-banker, you'll appreciate a lot of these processes and M&A sort of activities often end in disappointment. So the things that we are looking for are base metals. We look for something that's really going to move the dial for us. We, as I said earlier, generated just over $100 million of EBITDA. So in order to make a real difference and impact the value of the business significantly, we look for something that is either producing now 50 million plus of EBITDA, or in future will produce that similar level of EBITDA.
Right.
And from that perspective, we then go down through the P&L effectively and make sure, once we've done our numbers and looking at things, that we're accretive on all the key lines. So we EBITDA accretive, profit and EPS accretive ultimately. These things have to make sense to our shareholders.
Right. Okay. So I guess there's two parties here. Is what the board demands and wants to get, make, significant contribution towards the EBITDA is great, and advanced stage is great. And then there's the other party side of it, and you're right, I've been both sides of that transaction, and it's tough because there is a bit of competition for the good stuff. It's easy to kind of pick up the bad stuff. So in terms of deal breakers, I guess it's easy to highlight the things which steer you away. But is there any kind of niche component to what you do? Like, you're in North Macedonia, you're in Kazakhstan. These are territories that most companies would steer or veer away from. Do you think you're going to be able to maybe find success there? And how do you go about sort of identifying these assets?
Yeah, look, it's a good question. I think we've always, within our strategic kind of parameters we set ourselves, talked about this European time zone being important for us, and then Kazakhstan. So we wouldn't look outside Kazakhstan in the other stands, but we still think Kazakhstan is a great place to look for the new or the next opportunity. It's from a mineral endowment perspective, it's really strong. They've recently a few years ago, they've changed the mining code there to attract more participants into that, and we have seen that happening. And what we've got there is an operating asset with a brilliant network of people. So we've got the operational experience. We can navigate our way through the permitting processes. So I think we've got a real advantage there. So we do actually see a lot of opportunities that potentially other people outside of Kazakhstan don't, just because of that advantage. So clearly is a focus for us. And when I said earlier we'd made a couple of offers, a couple of those were in Kazakhstan itself. Now, the reason those fell over with more value, and the other one was more on a technical kind of issue that we couldn't get our heads around. And we could probably say the same for the other things that passed us by last year, where one was a competitive process, and we got outbid. The other one wasn't as competitive, but also got outbid on. So you can't really help that if people see more synergy or more value than you do. That's a bit difficult. But
do you think that having the Kazakhstan asset, having North Macedonia asset, it kind of people apply that a kind of discount, because there's not jurisdictions that most people understand. One being perceived as ex-Russia and everything that comes with that, and the other a small part of Eastern Europe, which again no one understands. How important is it for you to kind of pick something up in the right jurisdiction? We've seen people like Silvercorp, go from China, where their banks are marked down, into Ecuador, where perhaps they've seen a little bit of value accretion by kind of de-risking, mitigating the risk of a part of the world which investors don't understand.
You're dealing with Mother Nature here, and you can't control the timing of these things a little bit. So we do get our heads turned by things outside of those jurisdictional bounds anyway. But yes, it would be nice to diversify the risk. I think it always is for a small miner. I think the history of junior mining is littered with sort of single asset, single country companies, which for whatever reason is just hasn't worked out. But no, I think Kazakhstan has kind of always been a good jurisdiction. I think it's, yes, the perception might not be there, but if people look, just even you don't scratch the surface very hard. It's an investment grade country. You've got a lot of Western capital going in there, particularly in the oil and gas industry. You've got Western miners, including Rio Tinto, FMG, First Quantum, Ivanhoe most recently, Tech Resources have all invested money in there. So, these guys are probably more at the more risk-averse end of the mining spectrum, where you usually get the junior sort of busting frontiers and getting into things. So I think Kazakhstan is at a point where, with the interest from the majors now, it's a proper grown-up mining jurisdiction. And I think, it shouldn't be marked down, but I think it probably is, just because I think particularly North American investors kind of pass a little bit to the FSU and just go, maybe not their cup of tea. But, frankly, we've never had any issues operating there. There's been those disruptions in the early 2022 with political uprisings. And, the only consequence there for us has been the change in the tax laws, which we expected to come anyway with the redistribution of wealth required within the country post the previous regime. So other than that, operating there has actually been pretty straightforward, actually.
No, I agree with you. And I've worked there, but in oil and gas, admittedly, not oil, admittedly. So I understand that. But, and the metals sell, copper and zinc, they sell for what, the market says. There's no discount on that. But there is a kind of markdown. And obviously, name dropping some of the big names that are operating in country now is great, but they do have big portfolios too. It's not a kind of, effectively, it's sort of a single jurisdiction component for a company. Well, you're doing well, you're dishing out big dividends, no one's complaining about it, you've got lots of optionality in terms of cash, but in terms of those multiples that you would hope for, they're just not there. That's why I asked the question about diversifying the risk, so the jurisdiction component for the market.
As I said, I think it is a good thing for any board and business to do, is diversify risk and provide their shareholders with a platform that generates similar returns for less risk, because you should get a re-rate theoretically off of that. but if something really good comes up in Kazakhstan, I'm not going to wait. Yeah. And I think, the problem is that with this, the timing is not necessarily in our gift, in terms of when opportunities arise, when we identify them, and, when the market's right to transact on these things, really. So, ultimately what we want to do is build a portfolio of assets that leverage off of the operating cash flow that we've got. So we've got, Kunrad in Kazakhstan, we've got Sasa in North Macedonia, between them, as I said, producing about $66 million of cash. Now, that allows us to borrow quite a lot of money, but, so that means effecting transactions without diluting the shareholder base, unless it's, at the size where we have a shareholder vote, in which case we'd offer our shareholders the chance to participate. But, and we've got the early stage stuff, which is, again, we recognize it's not necessarily going to move the dial for us just yet, but that is kind of longer term opportunities. It's populating the middle now that we're really interested in. Right? It's getting something that sits in between that operating cash flow and in between those early stage greenfields style exploration, and that means something that's got a resource on it. So we can bring our engineering skills to the fore. We've got a brilliant set of skills across the business. We've got heap leach, we've got all the different kinds of mineral processing. We've got underground, we've got dry stack tailings now, we've got underground paste backfill. These are things that, the whole tailings deposition model has moved towards those things, and I think we're not experts, but we're certainly ahead of the pack, certainly in terms of the juniors, in implementing these things and operating these things. So I think it is a very good opportunity for us to find, we call them in the presentation, I think we've called them ad hoc overlooked things, which is a kind of, these things are maybe companies that have made the discovery, they've moved the project up the curve a little bit, but just don't have the money to get to feasibility study level or to get to a construction decision, right? And that's expensive, right? You could spend millions of dollars moving up that value curve, but we got the wherewithal to do that. So we think we're the right people with the right skills to actually, take on those sorts of projects. Having said that, adding a third operating asset to the portfolio would just, as you say, diversify the risk of all the cash flows and also just give us a little bit more scale and firepower to do that. So that's not off the table by any means.
Okay, well, let's look at some of this, that kind of operational outlook. I mean, you mentioned that the Sasa transition from paste backfill to DST. Are there kind of any kind of early performance indicators or KPIs this quarter that you're looking at which are encouraging?
Well, I think for 2024 was the first year that we've actually run that paste backfill plant for the whole year, and it achieved exactly what we wanted it to do. So life of mine, we've been quoting that we're going to be putting between 30 and 40% of our tailings back underground, and we did about 700,000 tons of tailings last year. We put 240,000 tons of those back underground. So like bang on target for the paste backfill plant. And that includes the first 3 months of commissioning, which is quite tricky. Frankly, it's the first time our guys have run it. We did import some skills to help us with that implementation. We also sent our staff to paste backfill operations around the world to familiarize themselves with how these things were operating. But to get up the learning curve pretty quickly and to achieve that, about a third of the tailings go underground, I think was a great result. And we've got to continue doing that for the life of mine, really. And we're just completing the construction and commissioning of the dry stack tailings plant now. So that should be, just looking at my calendar in the corner of the screen here, that should be putting what we call filter cake onto the surface by the end of the month.
Right.
So
okay.
That'll take care of about 30 to 40% of the tailings for the life of mine as well. Probably towards the upper end of that, and that's a key component of our tailings deposition strategy going forward. So, with those two things now getting into full operation, what that means is we don't have to build another wet tailings facility. The one that we're currently operating should be the last one that we ever have, unless we have some success with increasing the size of the ore body and lengthening the life of mine significantly. Then we should be set fair in terms of investment at Sasa for the time being.
Well, can we look at that in a bit more detail then? In terms of you've given us some updated break even leach grade, and how many more years that you can actually expect to produce on those kind of eastern dumps beyond 2025 into 2026,
Back to
etc.?
Conrad, yeah. So
Yeah,
Conrad, look, that's outperformed quite nicely on both the east and the west. So the eastern dumps, under our original plan, would have stopped producing probably 2-3 years ago.
right.
But again, these heap leach in general, and particularly this one, because it's in situ, as we discussed last time, we're not actually moving any of the rock. It's just all getting done, where it's been deposited originally. And there's a bit of learning as we go. And I think we've got to the point now, 30 years of operation, we're getting a really fine handle on how to, fine tune the operations here. And what we've seen, and just through a couple of initiatives already been applied to the eastern dumps, the thing called rinse and recycle. We've also irrigated the slopes. We've done a few other interesting things that we've actually probably exceeded expectations in terms of copper recoveries and also length of time we've reduced out of the west. Out of the east. So last year we did about 27% of our copper from the eastern dumps. We're actually, if you go back to the original plan from 2012, it was supposed to be zero. I think it's been really encouraging from that perspective. One of the other things that we're going to do is continue to, I'm about to say something without explaining why I'm about to say it. So 2024 represented the last sort of what we call fresh ore that we bleached on the eastern dumps. So from 2025 onwards now, it's kind of, we're recycling through dumps we've probably leached before. One of the reasons we can do that is because the copper price has gone up. So effectively our cutoff grade, if you like, we call it the pickup grade at Conrad, has decreased a little bit. So it's more profitable at these lower pickup grades. And the other benefit we have is because of the mineralogical differences between the east and the west, we basically use the PLS coming off of the eastern dumps to dilute the iron in the western dumps. The mineralogy is different, so we've got a lot more sort of iron-bearing minerals in west. And what that iron does is it decreases the current efficiency of the electrical currents flowing through the fluids and the solutions in the plant to plate the copper. So it helps us even just picking up the slightest amount of copper out of the east, mixing it with the west through what we call an intermediate leach system. And that then therefore, makes us far more efficient when the solution gets to the plant. So there's value to those eastern dumps, even if they're producing, much less copper than we would expect. But look, the western dumps are always going to dominate from now on. We started leaching there in 2017, and they're also outperformed actually. So that's been encouraging to us as well. So the expected recoveries that we're receiving from the western dumps are slightly higher than, the actual recoveries are slightly higher than the expected recoveries. So that's going really well. It's highly profitable still. I think 80 cents a pound. The cost we announced last week. And you compare that to $4.5-5 copper price now. It's super profitable.
Yeah, well, it is, and to that point, the copper price is doing a lot of heavy lifting for you, maintaining margins, increasing margins. And I'm sort of bouncing around between Conrad and Sasa a little bit here, but what I'm trying to get at is what are the things that you're doing to extend those life of mines? If I look at Sasa, you talked about mineralization down at the 550 level, all of these things help extend the life of mine. But what are the other things that you're doing trying to eking out this engineering process of yours to kind of maximize that margin, maximize that total return?
Yeah, look, I think we've demonstrated fairly good cost control as a business, since the inception, really. I think at Conrad, we do expect that the levels of copper production are going to tail off there, and that's just physics and chemistry. You can't fight that. That's going to happen. So, as I was saying, we've got costs down to probably almost as low as we can get it from. There's all sorts of initiatives we've used. We most recently, for example, put temperature gauges. It sounds kind of obvious in a place that, we can operate at -30, but putting temperature gauges into the pipes now to So we can really tweak the thermostat on the plant to, we heat the solution up before we put it on the dump so it doesn't freeze in the dumps. But, by simply just adding simple things like those sort of, you then therefore can reduce the amount of heating that you require, and therefore cost will come down again. The guys are always coming up with ideas of how to save costs here and there, and we've got a program of what we call cathode replacements. These are not to be confused with the copper cathodes we produce, but they are stainless steel cathodes that we plate the copper onto. And rather than just buying in a bunch of brand new cathodes every 6 years or so, the guys have found a machine that can roll press these cathodes and make them last a bit longer. And so they're brilliant engineers out there. They really are a fantastic team, and they're constantly thinking of things. And it's all these little marginal gains that kind of add up to where we get to on costs. Can we do anything in terms of life of mine at Kounrad? Look, again, we've got the leach curves. So we've got the theoretical leach curve. We know what that looks like, and we've in the past said, look, it's 2034. That's when the license expires. It's going to produce copper beyond that, but we'll have a look and see what that's going to look like at the time and make a decision then. Given what I was talking about earlier with this outperformance that we've experienced, this is maybe a study we should be doing now and having a look at, what does life look like for that project beyond 2034? Is it going to be interesting to us? Does it provide us another opportunity? But
right.
That's early.
Yeah.
So I don't want to say too much about that because we haven't done any proper, engineering on it, and
I get that.
To the authorities, but it's that's quite interesting.
Is it? Well, I'm eager to kind of get, because I bounced around the potential M&A, which is like, it'll be what it is, and you'll report it once you've got something over the line. And the same with the extending and maximizing the efficiency of the current operations. And when you talk about things, well, potentially like the Aberdeen potential, Arthrath, how do you make that potentially a flagship project at some point in the future, or is it only ever going to be a kind of minority optional play going forward? And how do you kind of build out that portfolio with the other licenses, etc.? So this is all, I guess, staged and staggered, and you need to be prioritized. And can you tell us, talked about those sorts of conversation, and here the team is doing what to understand where the future allocation of capital goes with the existing portfolio rather than just M&A?
Yeah, sure. Look, I mean, I think we're a small team, right? So it's myself, the CFO, Louise Rathel, we've got our COO, Scott Yelland, who, whilst he's heading towards retirement, we're going to retain him as a kind of, we're not letting him go completely. We're going to unleash the guy. So he'll be in the conversation. And similarly, we've got a chap called Howard Nicholson, who's our technical director, who basically built and got Kounrad up and running, who's still with us as well. So I guess they're and along with the general directors on site, who I said, Kounrad very talented, same at Sasa. There's constant conversations going on about where we can, improve performance, where we can reduce costs, where we can increase efficiencies. Now, Sasa is quite a good example because, 2025 for us at Sasa is all about stabilizing that asset. We've done those transition projects that you mentioned earlier. Those things, we need to bed them down and then get that operation, humming along as efficiently as we can. So, one of the things we do there is try to make use of this investment we've made. So, we run a fleet of 20-ton trucks, for example, underground. The new central decline is actually sized for up to 50-ton trucks. Can we not only exploit the improved cycle times that the decline gives us, but also can we improve haulage efficiency by using larger trucks? But can we recycle water? I think we've set ourselves a target of recycling 75% of our water, but that wasn't only just a nice thing to do from an ESG, or a responsible thing to do, frankly, from an environmental and ESG perspective, but there's a massive cost saving for us, for doing that as well. So electricity, we built the solar power plant at Kounrad, and whilst it only produces 14% of our power, we're producing that at a fraction of the grid cost. And the grid cost there is super low. The grid cost in Kazakhstan is 6 cents per kilowatt hour. That little facility produces electricity at 1 cent. And if you want to be all accountancy about it. You can add in the 3 cents of depreciation. So even with all of that, it's still cheaper than buying electricity off the grid. So there's maybe another opportunity to add another one of those, right? So constantly thinking about these things. The other thing is, around efficiencies. We're starting to measure at SASA in terms of man hours, I beg your pardon to the ladies listening, but person hours per ton produced, right? And as an aside, weirdly, one of the things we battle there is the legislation that only allows men underground. It's crazy, right? So we actually...
Is that right?
Is
that right?
Yeah. It's a very archaic situation. So we are at the forefront of the lobbying to try and improve that legislation as well. And but anyway, so apologies for being slightly un-PC. But look, it's how many hours do people spend per ton produced? So we try to then incentivize people that way as well. So it goes into the compensation packages, and right the way up to my comp and Louise's comp is all these KPIs are kind of driven through there, which is I think the whole culture is really around we can control what we control. One of the key things we can control as a business is our costs. We price takers as commodity producers. Whatever happens in the big wide world happens. I can't change geopolitics. I can't control the Suez Canal being blocked for a while. I can't, that stuff just happens. And what I can do is and what we can do as a business, and what the board expects us to do, frankly, is to run this thing so that we can be profitable through the cycle. Right? So,
well, yeah, I mean, you obviously can't control it, but you can hedge. You can take a view, and you can change your strategy.
It's a funny one, right? And I think I spent a dozen years in an industry that made a lot of money out of hedging. So I get it. I understand the products. I understand how these things work. Going corporate is quite interesting because some of your shareholders don't mind, some of them do. They want the full exposure to the commodity prices. And then again, we're fortunate because we're low cost, so we don't have to defend a margin necessarily or a break-even margin. When we have hedged in the past, it's to defend a capital program, or we have considered hedging in order to defend debt service obligations, right? Because you can't, if you want to invest in the business, you want to make sure you've got enough money to do so. That's one reason to do it. Another reason is to, if you have invested in the business and you finance that through debt, you've got to pay the debt back. You can't get out of that. So that's when we would consider hedging. There were a few questions actually on the roadshow last week. Well, copper at these levels, would you consider it? And it's like, well, look, let's enjoy it while we can. And the next thing someone will go, oh, we want you to hedge at $10,000 a ton, and then it goes up to 12, and then the accountants make you put a line in the middle going, well, you lost a couple of $1 million, and you say, well, I only lost $1 million because I made another 10. It can't be helped,
There's only one moment where hedging strategy is valued. The rest of the time, people tell you what you did. Hindsight is a wonderful thing, isn't it? Really,
it is. But we don't know. We can't second guess the market. So I think we just focus on what we can control. And as I said, if we need to hedge, it'll be for a very good reason.
Yeah. Obviously, look, in which case I won't ask you about your views on copper, zinc prices at the moment, whether it be US trade tariffs or otherwise, because we would be equally useless as some of the economists that are doing that for us. But we'll talk about the management team. Obviously, been a bit of it. Obviously, you're new to the role, and Louise is new to her role, CFO role, etc. And I know you do have the input of the guys as well. But in terms of building the company up, you talk about a small team. You like a small team? Is it sort of allow you to be sort of nimble and sort of make decisions quickly, or do you think you're going to need to kind of transition to kind of bigger company mentality soon?
I think we try and look, certainly from a governance perspective, we try and behave like a bigger company, and I think we have invested a little bit in there as well. So we've got a couple of key people on the management team that look after that side of the ESG piece very well, and I think that is a good investment because the reporting requirements are such now that you just can't always outsource that or just ignore it. You're going to get penalized for it at some point. Do I have the team that's necessary to grow this business? Yes, at the moment, absolutely. I think we've got, as I said earlier, skills embedded within both operations that we draw on when we due diligence these things. And then, you've got to be able to, and that's another advantage, as an aside, in Kazakhstan, where we've got a team that's actually construction ready as well. They've built things, we've done everything ourselves, and we've done any sort of EPC or EPC stuff out there. If we ended up in a situation where we got this right and we got a nice juicy development asset in there, one of the items that we do due diligence is the existing team within that business. And, we're realistic in that, there may be a requirement to hire a few more key people. And in this industry, that's not easy. And we recognize that, but it's not impossible. So we're fairly confident that with the network we've got, both at board level and within the sort of executive team, that we'd be able to attract the right people.
No, it's really interesting to me. I worked in Kazakhstan in the oil sector. Big oil ponds, big oil lakes, the odd body floating in it, kind of thing. It looked like kind of the Wild West. But given the nature of what you do, you mentioned ESG there. It's probably a word which is kind of falling off most people's vocabulary when it comes to companies. I think it's perhaps seems to have had its time in the sun as far as the funds are concerned. They're not obliged to put ESG in the name or title of the fund anymore. But I think given the nature of what you do, it's probably very important as part of your own messaging. So even within a country like Kazakhstan, you feel that it's important to keep doing that. To what end is that a narrative? To what end is it the ability to actually pick up more projects? To what end is this a case of actually we need to leave some kind of economic legacy, etc.? So what's the reality of ESG in Kazakhstan now?
Well, in Kazakhstan, I think if we so the key is non-negotiable, right? So I think we just got to let's just take that as read. I think the E and the S side of things, it's a highly regulated country. So from the environmental perspective, we do have a lot of inspections. The guys, the authorities are highly knowledgeable and very proactive about these things. So we've got to make sure that we are operating in as responsible a manner as possible, and we try to exceed that as far as we can. We do, whilst I said we don't do any mining and handling there, but we are abstracting water. We are, we're moving about 25,000 cubic meters of fluids, which if they escaped into the environment would be, not great. So we've got to be, very careful to sort of get the engineers and the operators in that mindset that, we've got a responsibility to the environment. On the S side of things, I think we've got a massive advantage in Kazakhstan, actually, because we have invested in that over and above what's expected. Now, every subsoil use license in Kazakhstan has what they call there's a social element to it, that you have to make contributions to a social fund. But that goes to the Fed and they do what they like with it, fine. Whereas what we do through our Kunrat Foundation and through some ad hoc donations, we've responded quickly to a couple of kind of natural disasters, or sort of a fire recently destroyed an apartment block. So we were one of the key people in terms of putting the just looking after those people while they're doing it. But we've invested in things that make a real socioeconomic difference. So there's what we call a Kind Heart Center, which is a center for disabled kids. There's another center that we've established for victims of domestic violence, and most recently we financed the refurbishment of a youth center. That was about a $500,000 job for us, and actually our guys did the work themselves. That caters for all the youth in a town that is of about 50,000 people. Not all the youth, but there's a music studio, there's a dance studio, there's a computer room, there's audio. Just giving these guys, access to things that is extracurricular for them, but they really enjoy doing it. And you can actually see the difference it makes in the community. So where I'm going with this is that we've got a great track record of interacting with our communities that we're operating in. So should we go out and apply for a new license? I think that gives us a big advantage because we can then prove to the government that, we're responsible citizens within where we with where we operate. Yeah, so from that perspective, I think just in Kazakhstan alone, we've got while we're a tiny player in comparison to everyone else, that are sort of 13 to 14,000 tons of copper compared to Kaz Minerals or Kazakh Miss or, all these other players that are producing a lot more, and it's Glencore, Altai Polymetal, big company. It's what sets us aside, and a lot of people know us, right? So the local authorities know us because we're very active. We don't go out and seek the press for doing this, but it kind of naturally happens because these are important things to these in the regions that we operate in. So I think it does give us an advantage. You're right. It's maybe diminished in the eyes of fund managers now, but all the big institutions that are on our register still have very active ESG teams, looking at our ratings, looking at our policies, all that sort of thing. And importantly, as I mentioned earlier, we look to raise debt to minimize dilution to our shareholders when we're trying to effect transactions. And the lending banks, and even if you're going to sort of government grants and government for money, it is a very important aspect of their due diligence on us. Yeah. So I think whilst it's maybe lost its gloss a little bit, it's certainly still important.
Yeah, look, I'd agree. Yeah, wherever you are in the world. I mean, and I think it was important before ESG came along. I think it's important. It continues to be important now for it stops these potential roadblocks coming down the line and protects you. And you've got a bunch of ambassadors backing you in that sense as well. Gavin, really good chat, good catch up, great numbers announced with the end of year for sure. You're doing good work in country. You're making money. Looking for you guys to kick on this year. So stay in touch and let us know how you get on. Okay.
We will do. I look forward to coming back with some good news at some point. Thank you, Matt.